So again, as I said yesterday, we had Bernanke or Bernanke, whatever, speaking, and that moved the market a lot. Now personally, I don't care what they say in terms of trading. It's not like I don't care anyway, but when I trade, if I look for setups, I'm only interested in what the market does afterwards, after the news release. I don't really care about the numbers, okay, because I want to see the reaction on the chart. That's the only thing that interests me, and because that is an important lesson, and we got it right now, still live here, even though that was yesterday, because we saw some changes on the chart on many pairs. That's why I'm going to record part of this session. Remember, I will only record sessions for the Inner Circle members area when it really makes sense. Everything else we cover together live in the live sessions anyway, but if there is something special like today, I will record part of the sessions, and later on I will upload it to the members area in a special extra module I will create after the session, okay? That way you always have these extra videos when the market does something funny, to put it that way, okay? Now, what did we say so far about, in this case, the Euro-US dollar? To bring it to the point, uptrend, we had an uptrend, we had our first entries down here on the 4-hourly chart, the change of the direction, and all in all, of course, from the weekly chart coming, we have a big range between just leave it at the most touches between 33 and 34. We have our weekly range, okay? So the price bounced on support down here close to 1.28, and on the daily chart you can also start drawing a line here where you have 1, 2, 3 touches, or you can start drawing it from up here. It doesn't really matter much as long as you see the bounce on support again here, and the break of the 36. Then we switched to the 4-hourly chart, and there again you see the bottom formation there. Crossover, the price creates a higher high, a higher low. It's bouncing on the 36, which is ideal for us, and then we have our 2 to 3 line break, a 4-hourly entry, and since then the price is moving up almost 3 weeks. And up here we had a little bit of trouble. Yeah, the price started to range because it hit major resistance between 1.3380 and 1.44, and you could see no higher points. The price still created higher lows, but not really higher highs. So I tried it once, broke the 1.34 level, and these are the very, very important areas there. If I switch from here to the 1-hourly chart, it's easier to spot, easier to understand. So look at all the support we had and all the touches there, and up here our resistance line. I can delete one, we don't need to. So remember what we said, we need a clear setup and a clear break, so the price should create a nice big 1, 2, 3 over the 1.40 area. And what it did, it broke in the end 1.34 a little bit, but then it retraced back, and it actually, that was our previous support area where we had the most touches, right? It stayed still over that support line, but it was under 1.34, so it stayed again close to support. And we said, if somebody wants to trade this, because we know that is major resistance and support in this case here right now, okay? You want to do that just by risking less, right? Like if you trade on the 1 hourly chart, we said we have the 4 hourly setup combination with a 5 minute, or the 1 hourly chart, or the 1 hourly in combination with the 5 minute. So if you want to do that aggressively, what you do, you just risk less instead of 1%, maybe 0.5% or even less aggressively, or you leave it and wait. Remember what we said yesterday, for a new setup that will clear the 1.34 area, and this way we make sure the price really creates a higher high and a higher low, and it really wants to move higher. Okay, does everybody remember that? It's a very, very important area. When we see the price hitting major resistance, usually what happens? Do you remember what we said yesterday? The price will usually, it won't bounce on resistance and then immediately retrace, but it usually starts to range in this area, and usually we also can draw kind of a wedge on lower time frames like the 1 hourly chart. And if that happens, we know that we have a resistance area of about 30, 40, 50 pips, right? We'd never draw a line, horizontal line, and say, okay, 1.3380 is resistance, buy the pip. We have a kind of an area, a buffer of about usually 40, 50 pips of resistance, and we want, if the round number is close by, like the 1.3400, then we want to make sure that area really breaks. That means the price creates a high that breaks that area, it retraces back to the 36, and it really stays over above 1.34 in this example. Or we want to see a break of support on the 1 hourly and 4 hourly chart, and then we are looking for a setup under support to short that particular pair. Yeah, very, very important. That's why I'm recording that. We were watching that live since Tuesday, and we were waiting, so it was a patience game. And right now, what happened? The price broke support after yesterday's announcements, and now what we have to wait for, we want to be a little bit conservative, right? We don't want to be aggressive and jump in at the lowest point, and that means that we have the announcement and everything is crashing, for instance. Okay, as a, let's say, trader focusing mostly on higher time frames, or at least combining higher time frames with lower time frames, you need a confirmation, and that confirmation is after a trend line break and a break of the 36 CMA, and of course the first signs of a trend or direction change. What we need is a new 1, 2, 3, and to focus on shorts we need a lower low, and we need then a lower high, ideally retracement back to the 36. Now that we have the 200 EMA also close by, a retracement back to the 200 is also okay. We know that here was caused by news, and the reaction live is always great for news traders, or for people that try to that trade a little bit aggressive. Yeah, and we'll cover that as well, but for now we want to be more conservative, and we want to wait for that retracement, that lower high, and then a bounce on resistance, a 2 to 3 line break at some point, and that would start to confirm a real direction change. Okay, is that clear so far to everybody? So with other words, when everybody gets nervous because of that, you just have to stay back, relax, and wait for potential setup. Great. So let's also check the other pairs. Now in this example, we had 1, 2, 3 setups after major trend line break, another major trend line here, another 1, 2, 3. Let me delete that so it's not confusing. And about the 1, 2, 3s, when we start looking from higher time frames, looking for setups or trend line changes, in this case down here coming from the daily chart, we had a trend line, and we also had one up here with 1, 2, and 3 touches. Why 3 touches? Because the price here bounced on the 36, and because the price moved up from down here over 2,600 pips, and the 36 was about 1,000 pips away, we assume that if the 36 EMA breaks, that we will get some setups, even knowing that that would be against the weekly main trend. We would still get setups on lower time frames like the daily or 4-hourly chart to trade against the main trend, because our target, the 36 EMA, is 1,000 pips away. Okay, and as long as we can cover the first and second lot, it's okay to do so if the target is big enough. And now we had a daily trend line break and then on the 4-hourly chart, if you look at your first trend line break, the 36 EMA on the daily chart, here it's the 200 EMA on the 4-hourly, and then we had a 1, 2, 3 setup. So what is a good and nice 1, 2, 3 setup? That is, first of all, we need our crossover. We got it here. You have another 1, 2, 3 here, but it is still over the 36 on the daily chart and over the 200 in this case on the 4-hourly. That means this 1, 2, 3 is still over support, and you don't want to trade. Let's switch again back. You don't want to trade when the price is sitting on support. You don't want to trade short. You need a confirmation, you need a clear break of the trend line, and then let's wait for a new setup below the trend line and below the 36, right? Again, a setup under the trend line on the daily chart and under the 36, and of course we do that by switching to a lower time frame like the 4-hourly chart first and look for setups there. And please remember, it's very important, you don't look for a short setup when the price is exactly on or a little bit over a support or resistance, of course, if it's if you're looking for longs. Now you need to wait for clear break and a setup below on the next lower time frame, and we start from the weekly, daily, and now it's the 4-hourly. And if you look at that, that happened. Price came down, it retraced back to the 36, in this case also the 200 EMA, they are close together, and then we had a clear 2 to 3 line break, a candle that broke the 2 to 3 line and closed between point 2 and 3 on our 1, 2, 3 setup. So in this case you put your stop over the trend line in the 36, and you have a stop of about 100 to 120 pips on the 4-hourly chart. Correct? Then you go for 120 pips for the first lot, or 100, then 200 or 240, twice the stop, and you would leave the last lot open, and as long as your trend line holds on that 4-hourly chart, at least you have to stay in according to the rules. And if this price starts creating a new low and a new confirmation after a new 1 to 3, you can start trailing your stop over the trend line, or of course over the 36 EMA. That is up to you, depending on the potential. Now down here, you know that you have major support, and you know that you trade against the main trend, so you would trail your stop closer to the 36 EMA. And then you get stopped out with the remaining position down here. Worst scenario, and you are out of the shorts. Is that okay so far? I hope so. Okay, great. Now about the good and the bad 1 to 3s. This here, is that a nice 1 to 3, just the setup, not where it is, but just the setup? Is that a nice 1 to 3? Even if you start drawing it from the previous retracements to the 36, and it would look a little bit like that. It is, because the price moves in one direction, steady, mostly red candles, and it also retraces steady back to resistance, and we have a move of about 260 pips and a retracement of about 160 pips. That is more than 50%, and good enough to say that is a nice setup. Yeah, a nice smooth setup. The price retraces, as I said, steady, nice 1 to green candles, and immediately back to resistance, and then you can see the price stays there for a while and then really moves lower. The next setup, 1, 2, 3. It's more powerful as a setup. It's not the first one you want to choose, but now it's the second one, so the price already moved, and of course you want to look for the first nice setup. Now that's the second, and it's a little bit more aggressive, but the good thing is the price retraces 500, moves lower 550 pips, retraces over 400. That is much more than 50%. It also reaches the 36. You have some candles that cannot move higher. It retraces immediately back. It's not creating higher lows or something, and then you also get a nice 2 to 3 line break candle. And because of the big retracement, this entry and this entry is not that far from each other. Okay, it's not like you have an entry down here, and from here to your support area, which is about 600 pips, somewhere down here, it's still far enough to try it out. Okay, so you have the distance, which is still okay, and you have another good 1 to 3 setup. It's a little bit steep compared to that. It's not that smooth, but you see the price moves down. It creates that 1 to 2 level, and then you have a nice retracement with only green candles. It's not like thinking about it, it's really immediately retracing. So that again is a nice 1 2 3 setup, as a 1 to 3 setup. And now the last and most important part is this, where the price retraces down closer now to major support coming from the daily and weekly chart also, and now you get only a retracement to the 12 EMA. Price creates a higher low, retracement only to the 12, another higher low, and then to the 36, another higher low. So this retracement to the 36 is nothing like that or that. Do you agree? We have higher lows, and a small higher high and a higher low. So that is not what we call a textbook setup. And of course it's closer to support. Usually when the price starts creating higher lows and higher highs and it's close to support, it will in the end probably not go, but it will break and move higher again. Yeah, that is a very, very important lesson, and you want to remember that. So now that we are doing that for 3 days, I record that and you have something to watch later on as a reminder. JK has a position open, is that correct? USD yen long, 1 minute stop loss 15 pips, entry 96.95, last lot running. Is it time to get out is a question. Okay, let us go and look at that. 96.95, that would be 96.95, 2 hours back. Okay, after that break we had the range resistance also. Now we have a 5 minute 1, 2, 3 there, and you entered on the 1 minute or on the 5 minute, you said, JK? 1 minute entry, 1 minute. Okay, so it doesn't really matter. I mean, even the 5 minute gives you the direction. Let me just check. I have to scroll back and forth here. Of 50, 96, oh sorry, 50 you said, not 96, somewhere down here. Let me scroll back quickly. You see the same thing on the 5 minute chart, as you can see here and here, so it's about the same. On the 5 minute chart it looks nicer. Look, you have a nice 1, 2, 3. Price is moving up 60 pips, it's retracing about 40 pips, it's more than 50%. Touch on the 36 EMA, entry there or entry there, more or less the same level. And you said you entered that on the 5 minute chart. It's a little bit late, of course, but you have support, and that's what we would call aggressive, but an entry because of volatility. Yeah. And I know you are experienced, you are not new to that, so you have your support there. You know the main direction is there, the volatility is there, so taking a trade up there is still okay, but still aggressive, of course. Okay, now the question was, should I take out the remaining position? Is that correct? So you had a 15 pips stop, and you took out probably 15 and 30 pips mainly, minimum. Is that correct, JK? Okay, and now you also the last position is in profit with about 80 pips. That is a good trade. A very good trade, so well done. And what about the management? 90 pips plus. Okay, well done. If you check, go back to the 1 hour to the 4 hourly chart, you have volatility, right? Price is at major resistance right now on the daily chart, but everything is still moving up. And remember, that is also a huge weekly 1, 2, 3 setup. And if the price wants to move higher, okay, higher, it could end up moving up and up and up, trying to reach the previous highs. So because of the volatility right now and of the win-win situation you are in, I wouldn't touch the last position. But what you could do so it makes you feel better, and you release and you get rid of the stress you might have. Would be, now that you see 100 pips, as long, let me switch to the 5-minute chart, as long as the price moves up and creates higher points, stay in. And if you see it looks like a bigger retracement on the 5-minute chart, take out half of the remaining position, if that's possible with your broker, yeah, and leave the last lot open, and don't even trail the stop. Yeah, what I mean is, if the stop is right now here or here, okay, you take out half of that remaining position. It's still going up, so leave it. But if you start not feeling comfortable anymore, take out half of that position. That means it's like taking, instead of 150 pips, and it will be a great trade all in all in case things go against you. But if the price decides to move higher and maybe retrace to the 36 and plays around there, but in the end later on today or tomorrow moves higher, this small scalping or day trade on the 1-minute chart with a 15 pip stop could turn in what we are preaching the whole week into what? Who remembers? Into a very, very powerful big swing trade. Yeah, it won't happen, and it doesn't work every day, but it could happen. And if that happens, remember, a 15 pip stop, if that goes up to the previous highs, which is about 500 pips from right now, you will have a position open with 500 and 600 pips profits, risking 15. And that happens all the time. It's nothing new to us. Okay, so JK, try to leave half of the position open. Look, it's still going your way. No reason to worry, and create a good, powerful win-win situation by taking half of it out and leave the rest open, and it won't harm you in any way. And keep me up to date with that trade. Send over some charts maybe later on, maybe next week, and in the live sessions anyway. Okay, so well done, great trade. And what we say about these things, remember, you want to see a confirmation first. That means a 1, 2, 3 on the 1-hourly and 4-hourly chart. And because we don't have it yet, what JK did was aggressive, but JK is not new to the system, and he has experience, and he used the 1-minute chart to approach this trade. So it's very, very small risk, and that's okay. Yeah, he still waited for a good opportunity after all these breaks, and that comes with a little bit of experience. Now, as I said, I'm recording this session or part of the session. Later on you probably want to watch it. We covered a lot of very, very important issues today here. Now on the 4-hourly chart, let me delete all these lines here. The price is moving down. We have major support, and then we have 1, 2, 3 touches and a higher high and a higher low. We have a 1, 2, 3, but not the crossover yet. Yeah, we have a 1, 2, 3, but not the crossover yet. And then we have a 2 to 3 line break on this 1, 2, 3 against the main trend. Now on the 4-hourly chart, because resistance is too close, and you would trade against that move still at that point, yeah, against the main direction on this chart, it makes sense to trade this by using a lower time frame. You don't have a crossover yet, as I said, but you have 3 touches and you have a 1, 2, 3 over the 36. The price retraces back to the line, but the 2 to 3 line break here happens over the 36 EMA. Can you see that? 1, you can even connect from down here. Then you have 4 touches. 1, 2, 3, 4 touches. higher low, higher low, the price stays over the 36. You have a 1, 2, 3, a 2 to 3 line break. You know the distance to resistance is about 170 pips. And after the 2 to 3 line break and the candle moving up and starting to turn to green, what do? You switch to the 5-minute chart. Didn't catch it live, unfortunately, but it's still a good lesson. And what happens here? The price is squeezed between the 200 and 633, what we call a sandwich situation, but then when it changes color on the 4-hourly, you get a 1, 2, 3 setup exactly where you want it to be, and that is over the 200, retracement to the 36, a move of about 50 pips, a retracement of about 25 pips, or 50% retracement, smooth move, nice retracement, 2 to 3 line break. Let me make it bigger. And then a candle that breaks the 2 to 3 line, closes there. The next one moves higher by 1 pip. You have an entry, a stop of 12, 13 pips plus spread, so about 15 pips. You take out the first and second lot quickly because it moves up 100 something pips in no time. You leave the stop for the remaining position where it is and turn that small intraday trade, because it's combined with a 4-hourly chart, into a swing trade. Leave the last position open, and now you expect another 1 to 3 at some point. And if the price moves higher and creates higher highs, you start trailing that stop from down here under your 4-hourly chart and turn that small day trade in a potential big powerful swing trade. Is that okay? Do you all understand this?